welcome to the Deep Dive. Today, well, we're jumping into crypto regulations. It feels like it's changing constantly, doesn't it?
It really does. A constant stream of news.
Yeah, headlines, challenges, sometimes opportunities.
Yeah.
It's a lot to track. So our mission today is simple. Cut through that noise. We want to map out the 2025 global regulations for you, the investor. And not just what's happening, but really, what does it mean for your portfolio? Are we getting clarity or, more confusion?
That's the million-dollar question, isn't it? Because it is such a dynamic environment right now. These changes, they're really shaping both the upsides and the risks in crypto.
Right.
But the big picture trend, I think, is pretty clear. It's a definite move towards more oversight, more standardization, and, this is crucial, better investor protection.
So the system's kind of catching up.
Kind of, yeah. It's like the traditional financial world is finally figuring out how to deal with these digital assets.
And that idea, the catching up, that feels like the main story here. It's
Yeah.
not just small tweaks, is it? It feels more like a fundamental shift.
I'd agree. It's about building trust, in a way, for this decentralized world within the existing structures, or trying to, anyway.
Like building new foundations.
Yeah.
And regulations are those blueprints. Could go either way, speed things up, or just fragment everything.
Exactly. The core direction, though, it's definitely towards more oversight. Not just rules for rules' sake, but standardization, trying to get regions aligned, and really boosting protection for investors.
Taking it out of the Wild West phase.
That's the goal, I think, making it feel more mature, more secure as a financial space.
Okay, let's unpack this then. Maybe region by region, see how different places are tackling it.
Good idea. Where should we start?
How about the U.S.? Because for 2025, it feels like there's a real shift happening there, maybe towards clearer, more crypto-friendly rules. It's been pretty ambiguous for a while.
Yes, that's a good place to start. There's a very noticeable move away from, what people called regulation by enforcement.
Right, the lawsuits.
Exactly. The new administration seems focused on actual comprehensive legislation, trying to clarify who oversees what, the SEC versus the CFTC debate.
The turf war.
Pretty much. The goal is to finally set up some stable guardrails, as they call them. Clear rules of the road.
And the impact of that, it sounds potentially huge. Is this the clarity investors and, big institutions have been waiting for?
That's certainly the hope. If they get this right, it could unlock serious institutional money. We're talking pension funds, maybe even sovereign wealth funds.
Wow. Entities that just couldn't touch crypto before because the rules were so murky.
Precisely. That kind of clarity is essential for them. It's a different class of investor.
Okay, so the U.S. is turning the supertanker. But then you look at the EU, Makar. That feels less like turning a tanker and more like launching a speedboat, regulatory-wise.
That's one way to put it. MACAR, the Markets and Crypto Assets Regulation. Yeah, it's a big one. It went fully live end of last year, December 2024.
And what does it actually do? Is it as comprehensive as it sounds?
It really is. It creates a single legal framework across all 27 EU countries. That means strict licenses, operational rules for crypto service providers, and really strong reserve requirements for stablecoins.
Trying to avoid another blow-up like Terra Luna.
Exactly that, building in safeguards. The aim is much better investor protection against fraud, against market manipulation.
Okay, so it sounds very thorough. But the classic question, does this kind of unified, strict approach stifle innovation? Or does it actually help by making the rules clear?
That's the key debate, always. The EU is betting that clarity fosters responsible innovation. It gives legitimate businesses a clear path forward, attracts serious players.
So they think knowing the rules helps more than it hurts.
That seems to be the philosophy, and it arguably makes Europe one of the most structured and, in a way, predictable places for crypto businesses right now.
Interesting. Okay, let's shift focus a bit. What about key hubs in Asia, like Hong Kong, Singapore? Are they following a similar path?
They're definitely part of this global push for clearer rules, yeah, but maybe with their own local adjustments.
So what's happening in Hong Kong specifically?
Well, they've rolled out new licensing for exchanges, and they're working on pretty strict rules for stablecoins and also crypto derivatives.
Trying to find that balance too, huh? Innovation versus protection.
Seems to be the common theme globally, yes. Finding that sweet spot.
And Singapore, I know they've been quite active.
They have. Very rigorous licensing there, and they've already finalized their stablecoin rules. It's a very deliberate approach, trying to support crypto growth, but, responsibly.
Okay, makes sense. Now, what about down under, Australia? Are they joining this trend of tightening things up?
Absolutely. Australia is also putting a strong focus on consumer protection, echoing that global theme again.
So less crypto cowboys, more financial compliance.
You could say that. They've brought in new licensing for exchanges, got clearer tax laws sorted out, and beefed up their anti-money laundering, their AML measures. Plus, there's more coming. A digital asset platform licensing framework is on the way, and stablecoin regulations too. These will tie crypto platforms more closely to existing financial service rules.
So really integrating it into the mainstream financial system.
That's the direction, legitimizing the sector further.
Okay, so we have these national, regional efforts, but you mentioned global coordination earlier. How do international bodies fit in? Are they trying to, glue these pieces together?
That's a good way to think about it. Bodies like FATF, the Financial Action Task Force, they're huge on the anti-money laundering side.
Right, the travel rule and all that.
Exactly. And then you have the Bank for International Settlements, the BIS, and the Financial Stability Board, FSB. They're looking more at, the big picture financial stability, systemic risks.
And they're all pushing for alignment, common standards.
Yes, trying to get everyone on the same page regarding AML, KYC, know your customer, and basic safety and soundness standards for crypto firms, preventing companies from just moving to the place with the loosest rules.
But I saw a figure, something of compliance with FATS standards. It didn't look great.
Yes. That's a critical point. As of April 2025, the data showed only about 40 out of 138 jurisdictions were rated largely compliant with FATF's specific crypto recommendations.
Only 40 out of 138. That sounds low, like a big gap.
It is a significant gap. It highlights that global coordination, while it's still very much a work in progress.
So these gaps, these non-compliant places, they pose a risk, right? Like weak links in the chain, illicit funds could just flow through there.
That's precisely the risk. They can become havens for illicit activity, which ultimately undermines trust in the whole system, even in the well-regulated parts. It creates risks for everyone.
Okay, so putting this all together, regulations are getting clearer in major markets, global bodies are pushing for standards, but compliance is patchy. What does this actually mean for you, the listener, if you're investing or thinking about it?
Right. Let's break down the implications for you. First, in places like the US and EU, you are getting greater clarity and protection. That's good news. Fewer legal gray areas, less risk of outright scams, perhaps.
Okay, that's a positive.
Second, expect increased compliance requirements on the platforms you use. Exchanges, wallets, service providers, they'll have more hoops to jump through, which should mean safer, more transparent places for you to invest.
More paperwork maybe, but safer overall.
Potentially, yes. Third, and this is important, be aware of market fragmentation. The rules in Europe are not the rules in Asia, which are not the rules in, say, Latin America. Some countries, like China, still have outright bans.
So where you live really matters, and where the platform is based.
Absolutely. You need to pay attention to those jurisdictional differences. What you can legally access might vary wildly. And finally, expect heightened scrutiny on stablecoins and DeFi, decentralized finance. Regulators are definitely focusing there, so expect new rules that could change how those sectors work.
Okay, so more protection in some places, more compliance, but also fragmentation and specific focus on things like stable coins and DeFi.
That sums it up pretty well.
But the overall direction, it does feel like a move towards a more grown-up, maybe more secure crypto market compared to a few years ago.
I think that's fair to say. The global trend is definitely towards clearer, stricter, and ideally more harmonized rules. It's a maturation process.
So that wraps up our deep dive into the pretty tangled world of global crypto regulations for 2025. We've gone from the US shift to the EU's MACAR, looked at Asia, Australia, and the global coordination efforts, or lack thereof sometimes. It's easy to get lost in the acronyms and the legal details, but stepping back, it really is like watching a whole new financial system trying to find its place in the old one. It's quite something to witness.
It really is. And maybe a final thought for you to mull over. While things are maturing, that uneven pace of rulemaking and rule following across the globe, it means truly seamless global crypto investing. That might still be a ways off. So the question for you becomes, how do you navigate that? How do you balance the opportunities in the more regulated markets with the risks and maybe the restrictions that exist elsewhere? What's your plan for a world where crypto is both being embraced and, in some corners, still pushed away?
A fascinating challenge indeed. And a reminder to stay informed because this space, as we said, it changes fast.
Constantly.
Thanks for joining us on The Deep Dive.